Okay, we're back here on the show. Ooh, got a little bit of an echo there. Okay, it's gone now. Okay.
Ominous.
Anyway, that was awesome. The Caretakers. I'm going to go see them Thursday.
Oh, me too. They sound awesome.
Too bad it wasn't Wednesday. We could all go there.
I know.
Because it's right around the corner from...
I know. The class. I know.
Okay. Hey, we got Jake Tiley here, and we're talking about, well, we're really going to get into preparing for market volatility, Jake, and that's sounds ominous. Market volatility.
Yeah, that doesn't sound so good.
Ominous.
Well, you know,
if you're in the right, if you're volatility, that's what the whole game is about. If you can swing and ding with the hits and the misses.
Right, but it means you got to be.
Okay, I'm just picturing Wonder Woman, you know, with that gear that she has.
Pretty much the bracelets that deflect, right?
Yeah.
Yeah, you got to get real good at that, though,
Yeah.
right? You know, so what's happening? Why are the markets going more and more volatile? Are we going to hit a threshold and it's going to get super volatile?
It's called December 21st.
That's where people make the money. And so the people that run the world already have positions, so the more that they make us feel the volatility, the more they can take advantage of those volatile positions or bet on volatility. And the more scared the population gets, the more important it is to really understand the statement. If you feel like puking, buy. And it's somewhat like when you want to puke, you buy. It's by a guy that took 300,000 in 1980, in the early 1980s, and turned it into 23 billion in by 2008.
Did he puke?
So he says, Paul Tudor Jones, one of the greatest traders on earth, said, you know, when you feel like puking, that's when you make your best trade, generally. Now,
oh my God.
Now that's counter to everything, which is when you're feeling good. When you're feeling good, sell, and when you're feeling bad, think about buying more. I mean, you're always owning your loss, though. You're not blaming someone else.
But isn't your judgment off when you're feeling bad? How does that work?
You have to learn that your first loss is your best loss, and when you start losing in the market, you start to learn. It's like a schooling, and when you get a chance to go through that schooling for about 5 years, you'll make better decisions. Your bet sizes are going to go down, and you're going to make some wins, and then you're going to be on top of the world and say, hey, look at me, Ma, I'm on top of the world. And then the next trade you're going to do, you're probably going to be on the bottom of the world, because that's invariably what happens. So it's between fear and greed is the best place to make your choices.
Quick question. You mentioned the volatility right off the top, and you said the powers that be, the high guys.
Banks, brokerages.
Do they ever experience the volatility? Because you talked about the little guy experiencing it.
Well, they're rich to begin with. I mean,
so they get to set the volatility.
Some money in the cabin in the woods.
He doesn't have to worry about his Chinese portfolio anymore.
That's an interesting point. Next year is the year of the snake, and as you understand, I do cycles work, and I do market cycles work, and moon cycles work, and astrological cycles as well. And we have to see that the year of the snake next year, which could be much more prosperous, this year has been the year of dragon, which has been very cautious, and that's been seen. So prepare for more strength out of China. Investors, if they just want to have a little bit of exposure to China with the top names in China, they can look at the FXI, which is an exchange-traded fund. It's like an ETF, an exchange-traded fund that trades like a stock. It's a basket of high-profile Chinese companies. That's the FXI, and that's something they can look at. Owning 100 shares for the next 5 years kind of thing.
Okay, so we don't have too much time here, Jake, and you were talking about preparing for market volatility. I mean, what can people do today to prepare for this?
I came out a couple of times on the wonderful Liquid Lunch, and I mentioned Apple looked really good, and we had a nice run. It got up to over 700, and I got out to my clients, which have grown substantially, which I'm very pleased to say. Part to do with Liquid Lunch, and people have seen my clips and have contacted me and asked me to be their client, and some wonderful stuff. Apple got very overbought around the 700 level, and it fell 24% in the last month and a bit.
Wow.
And I didn't wear my red pants today, my red polo pants, which I normally do if Apple's down on the day, because everyone's in their head going, why am I in Apple? It's supposed to be the greatest company on earth for the next 100 years, and it's basically traded a little bounce. But people have to understand, the way that you look at markets is the inverse the way that you look at the world. So if you think the market's going to hell, you probably, and you're a novice or an intermediate player in the market, unless you're some clairvoyant, you're probably on the other side of that trade. So you really want to buy the market at that particular point. And if you think everything's rosy and it's just wonderful and we're going to have this great economy going forward, it's probably good to lessen your positions.
It sounds like what you're saying, Jake, is that we should do the opposite of what we think we should do.
Pretty much, and it's hard to do it because you buy the stock and it goes down 5%.
Yeah.
You buy 25 shares of like a company like, you know, if you like a company like, if you like the ETF like FXI, you don't have to buy the 100 at, you know, in the 35, 38 range. You can buy 25, as Jim Cramer does say, and buy 25 lower, buy 25 lower, because you're never going to get, or rarely going to get the right price until it's 45, and then you made a $8 move, and on 100 share that worked out pretty well over 3 years.
Okay, so the one strategy I think I'm getting is that when you want to puke, you buy.
You buy, but you buy small, and you own that loss. It's like poker meets you know, the firing line. You know, gun to your head. What do? Immediately, where do you think the markets are going? Close your eyes, because you're a novice investor,
Yes,
right, Sandra?
yes, I am.
And
Yes,
you're
I
a
am.
very smart woman. So, what do you feel is the best investment out there?
I'm saying right now, Apple.
Did you feel that? My gut check, right?
Yeah.
They've got 150 billion in cash, and they lost 145 billion in market cap. That's an interesting look. We'll have to do an analysis and come back when Apple's either 700 or 480.
No. The reason I'm saying that is because I know Apple's sunk a bit, but over the long term.
That's an excellent point, and I think leading into...
I'm not saying making money, like I'm talking making money 20 years down the line. Apple's a
disagree.
long-term investment.
why.
That's what I was thinking.
Well, I will get to the disagree, just to say, let's come back and say Apple's today 547. I didn't look at the exactly, we've been trading between 537 and 547 before I came on the show. Leading into Christmas, this company could trade at, you know, 600. But it might go lower to 520 or 510 before it does.
but it's
there's
going to
a
go
way
back
to
up,
do that.
correct?
Oh, that's a good question. Do you have any Apple in your portfolio?
No.
We'll revisit this, and in 2 months, I expect we're going to see some
Okay,
very interesting
okay.
things in January.
Okay, you know what?
And there's a
okay.
technology fund, the XLK, which has Apple in it, which you can take a look at it and get a basket of technology exposure without the cost of Apple, which is $547 a share. Now, you took the other side of the market, and now it's the world's best video game.
Okay.
Why do you think Apple is primed for going lower?
Because I think they're making the same mistake they did in the PC market. Yeah, they had a great product, but they still only have 5% of the market share because they're not, you know, they fight standards across different companies and, and across different industries. And they're doing the same thing with the iPhone. Because from what I understand now, that Samsung's coming out with things like the Note 2 that are actually much more configurable. They're much more, you know, conforming to standards that many companies are adopting. And to me, Apple's making the same mistake they did, and so they're relegated to 5% of the market share in the PC market, and I think the same thing's going to happen in the phone market.
I think you have some great points about interoperability issues and some of the connectivity issues with, you know, Flash, and the reason why Apple really doesn't use Flash is because of the fact that they don't want you to be able to use Flash and access other, you know...
Yeah, thanks, but I want to make that choice. I don't want Apple to make that choice for me. And I
Okay,
want to look under the hood. If I want to look under the hood, I want to look under the hood.
See, now you look at his approach and look at my approach. I came from a complete feeling. He came from the thinking, right? But the thing is now, even from that, he's saying, okay, because they're doing this wrong and this wrong and this wrong and this wrong, that's why he wouldn't. But I'm saying because there's so much room to improve, I think it's once they figure that out, it's going to go up. And
they got rid of Scott Forstall, who probably wasn't a good hire at the company, even though Jobs really liked him, because he was almost a megalomaniac, from what I understand, in the way he operated and housed the engineers. And
but that seems to be the corporate culture there.
Tim Cook is more of a pragmatic believer in getting things done in a good way, maybe not the best way, and he's fierce he's fiercely determined. So, we're right at the, at a range where Apple could trade lower, but I think you may be onto something. If the markets hold up, it could trade higher. There's better opportunities out there, and girls should look into diamonds and what Harry Winston may do over the next 10 years.
Well, I was going to say silver.
And silver, how come silver?
Because I think it's the more affordable commodity right now.
That's a very interesting choice. So it's the poor man's gold in essence.
Yeah, exactly,
right?
exactly.
And there's great silver companies in Canada. Silver Wheaton, which is SLW, which is a royalty company. That's by no means a recommendation. But if you look at how these companies perform in more strengthening economic times, which we may be leading into, it'll be interesting to see if you can buy it on a pullback in the next month.
Okay, Jake, we're almost out of time here, and I want to make sure that you say everything you want to do, but I just want to ask you briefly. Everybody's talking about the fiscal cliff. Greece just passed their austerity bill, and they're just a little bit ahead of. Everybody's going to hit that wall at some point. What are your thoughts about that? You just mentioned we might be going into more prosperity, but we got that fiscal cliff.
We have that fiscal cliff, but it comes at a great time, just before the Christmas season. We can ramp up into greater markets in terms of the upside, and you've got this negative fiscal cliff issue and austerity in Greece and 54% unemployment among the youth around the world between ages of 20 and 25.
Wow.
There's so much negative. It's almost hard not to say we're going a little bit higher, maybe 5%. In the coming months, in the next 6 months. As for media and exposure, Facebook, I think I was on here, and
yes,
it came down pretty heavily. It went from 40 to 1760, and then bumped up to about 25.
What is it now?
It's in the $20 range,
okay,
and it may represent a buy for the next 5-10 years. But always remember, when your neighbor's telling you to buy it, get in touch with the show. They can get in touch with me at jake@softanalytics.net, and that might be the best time to get rid of it, because your neighbor probably doesn't know what Facebook does.
Right.
And regarding the fiscal cliff, that's just media hyperbole coming to you in a time where it's possibly the right time to buy because it feels so wrong.
Okay.
Right.
Can I ask a question? Do we have enough time? Monsanto.
Yes. It's performed incredibly well, and they seem to have the right judges in their pocket worldwide for the returning of their policies. But you know what you want to do? You want to look at how prices work when you hear about the big droughts in the Midwest, $8 corn. Now corn is $7.20, $7.16 on the low. So when that big news comes out, that might be the time to wait for a pullback. Corn might be a good opportunity in the next 10 years. There's an ETF. There's companies like CORN that also track corn a little more closely and don't cost as much with the risk in the futures market. And there's some other indexes like the RJA, which is the Rogers Commodity Agricultural ETF as well, which allow you to take a position in corn, but you don't have the exposure and the downside loss.
So even if you don't like eating genetically modified foods, you can still make money.
I like to be...
How do you reconcile that?
I like to be organic and do less GMO and, look at those ETFs, those like agricultural commodity ETFs to take the other side of that trade, and in my body GMO is less.
Okay,
So
very
ethical
interesting.
ones.
Very interesting. We're going to have a conversation
Okay.
later on in the show about GMOs specifically.
Yes.
So Jake,
Monsanto.
thanks for doing this today. Now again, where can people get in touch with you if they want to?
At softanalytics.net, with Jake at softanalytics.net. And regarding the GMOs and Monsanto, they are now working on GMO beet GMO, so for actual production for fuel.
For beets.
For beets.
Which is also good if you're a big juice fan.
For
You can have genetically
fuel.
modified beets rather than just
Borscht
natural
and
beets.
fuel. Get ready.
Okay.
Wow.
All right, Jake. This is great. Thanks for doing
Thank
this.
you.
As always.
Interesting.
Okay, we're going to take a little break. We've got a video with Fidel Gastro, Rebel Without a Kitchen. We're going to come back with Matt Basile as Liquid Lunch continues. We'll be right back.
People love to know, especially with food, what's the next big thing. Every night, essentially, is an opening night for me. Show up in a place that definitely is not a restaurant, make it one for a few hours. We're at the Evergreen Brickworks. We're here for Toronto Ground Market. The city loves this type of event. The crowds get crazier, and there's new vendors all the time. You know, it's food at its most simplest form, you know, off the table, and it's good. It's street food at its finest. This will be, I believe, my 5th time. Each one, you think they get easier and easier, but they actually get harder and harder because you sold out fast the first time, so you gotta come back, make more food this time. They definitely don't get easier, they get harder as they go on. It got pretty late. I mean, we have about an hour, and I still have about 500 buns to cut. I still have salsa to make. Still need to get fire on all my water to actually Ryan, put fire on the water, bro.